Good morning, everyone. Today we are reviewing price action from the S&P 500 from yesterday, Thursday, April 17th. So here we have a 15-minute chart, and I just want to draw your attention to these relative equal lows right here on the 15-minute chart. It's going to be our target for today. Okay, so just before the 9:30 open, we see price come up into this fair value gap here. And see how the candles are respecting it. Price drops. We have our 9:30 open right here. And then our first fair value gap that forms is right here at 9:40. So we always want to mark that out on our chart and see how price reacts to that. We have the 10 o'clock macro, which is one of my favorite times to be trading. And we see that at the 10 o'clock macro, price rallies to take out the buy side. Now there's not much of an entry here, but if you look on a 15-second chart, yes, ICT's concepts even work on 15-second charts. So here we have our first presented fair value gap. See price drop below it, and then come back up. And then right here at this candle, see the bodies are above it, but the wick comes down right to the bottom and then reacts off of it going higher. And then we take out the buy side here, so we have a market structure shift, bullish, and then we have this fair value gap highlighted in orange. And with these fair value gaps, we want to make sure that we're highlighting, we have to include the volume imbalance there. So price drops back into the fair value gap and then rallies, take out the buy side. That right there is a perfect trade right inside the 10 o'clock macro for a quick scalp. So if you were to go long, even if you got in right at that volume imbalance as price was coming back into it, right there, you set your stop loss beneath the fair value gap, and your target is going to be the buy side. 8 points. Targeting the buy side, get a quick scalp for 8 points on the ES in just a few minutes being in the trade. We're going to go back to the 1 minute chart here. Now you can see that trade right here on the 1 minute chart. So we take out the buy side and look at the bodies. Look at the bodies respecting this fair value gap right here. So the wicks are going up into it, but the bodies are staying below it. That's an indication that price is going to go lower. So price drops right here, creating a market structure shift, bearish. And we come back up into this 15-second fair value gap, and it's acting now as an inversion fair value gap. So initially, we wanted it to send price higher, but now that we're below it, we want to see it act as resistance. And then we're going to send price lower. So again, price drops. We take out these lows, so we have another market structure shift. So we are still bearish, and we get below the first presented fair value gap here. So now that we've dropped below it, price comes back up, and that right there is another trade opportunity to go short. Right as price comes into this fair value gap, it's the perfect opportunity to sell short. Targeting those 15-minute relative equal lows. And our stop loss we would place above the first presented fair value gap. And there's the trade for 24 points on the ES. That's the review of the S&P 500 morning session. Hope you guys enjoyed that. Have a good day, everyone.